okay? First of all, in this bill were some guarantees made to local governments. The local government folks were very involved in how the revenue would be distributed through this bill, being very sure that they came out of it basically at least as good, if not better, than where they were. So the legislature and the fiscal folks and some of the local government folks said, okay, let's look at what the best years in recent history have been for local government revenue. And it was basically determined that 2007 and 2008 were the best years for local governments. Now we know why. Everybody was fat and happy, right? We were building houses, we were buying stuff, we were spending money. Development was going on. There was lots of stuff. There was huge amounts of growth in most counties. What happened late 2007, 2008? It's like the brakes got put on, right? Everything stopped. That's why we have all those PVC farms around everywhere, right? They're growing PVC pipes sticking up. They're still not developed. So the economy began to go the other way then. Tax digest began to decrease. But basically 2007 and 2008 were very good years, both from sales tax and from property tax. So those were the years that they say, okay, we estimate that local governments in those years brought in as a whole, all local governments together, $1 billion. That's a lot of zeros out behind the end of a number, right? So that's one number that you need to keep in mind is the $1 billion. All right, the next definition that's in the statute is local current collection amount. That is the amount of ad valorem tax collected in the prior year. In this case, prior year refers to 2012. So the amount of ad valorem tax you're collecting monthly in 2012 is going to come into play when we start talking about how we're going to divide this new money up. So just keep all these little things in your head. Now we have a local target collection amount. This is the amount that we're going to work through our system to make sure local governments, again as a whole, collect. So in 2013, it's going to be that $1 billion. Guarantee that they're going to match those good years. We're going to add 2% to it for 2014. We're telling local governments you're going to get $1,020 million. 2015, we're going to add another 2%. So we're going to give them $1,040 million. Now, it's interesting in this bill that everything kind of rocks along and every year is indicated up to 2022. Now, I'm not sure, does that mean that that the world stops in 2022? Or that just they decided to project sort of 10 years out in this bill? Now, so we have the local amounts. We know there's something that we're promising or has been promised to local governments. Now, I don't want to get left out, so there's an amount promised to the state. The state base amount is $535 million. Now the state's stake in the property tax world is very low, right? In 2012, for motor vehicles, bless you, twice. In the motor vehicle world for 2012, your millage rate is what for state tax? 0.20, right? Because the state millage rate has begun to decrease. So the state millage rate is low, but state gets a large portion of sales tax. We would get 4 cents on the dollar for sales tax in a motor vehicle sale. But the state amount is the $535 million. We're also going to look to see that the state is staying at that amount and what they would collect in 2015 based on where we are, assuming that we would be up to 7% in 2015, and we'll look at what that means in just a minute. And then we have the state target collection amount. So this bill also tells the state, all right, you're also going to get 2% increase on a yearly basis. So in 2014, we're going to add 2%, which means we're going to get 545,700,000. And you see for 2015, we've added another 2%. Well, how do we make this happen? How do we determine this? Well, there's a couple of things. There's a state target amount. The state has to meet a certain amount of money, in which case, if the state isn't getting the amount of money they need to get, the overall rate may be adjusted. Now, the overall rate is that 6.5, 6.75, and 7. Now, it's going to be 6.5 in 2013, 6.75 in 2014. 2015, it will go to 7%. Now, if everything stays great and we're all meeting our targets, it would stay at 7%. But should the state not get sufficient money, and we'll talk about why that might be as we move through the slides, then the overall rate may have to be adjusted up, in which case anything over 7% would belong to the state. And in my world, what goes up normally what? Never comes down, right? But then there's the local target amount, and that adjusts how the money is split between the state and the locals. There's a bucket of money, and we're going to take a certain amount and split it off, and we're going to send it to the state, and then there's a certain amount that will be sent to the locals. In the first year, the state's going to get 57% of the title ad valorem tax that comes in the door, and the locals are going to get 43%. Now, does that make sense to you? Who's getting the bulk of the ad valorem tax coming in today? You are, right? Very little of that money comes to the state. So, assuming that in 2013, there's still going to be tons and tons of vehicles on the ad valorem system, the theory and the underlying hypothesis is that there will be sufficient revenue coming in from ad valorem tax that you can split this money this way, and the state and the locals will get their share and the state will get theirs. I think you'll see on the next slide that over the years that we have projected in the bill, that split begins to change because the ad valorem tax should continue to decrease for a couple of reasons. More and more vehicles will be moving as they change owners, will be moving over into the new system, so they won't be paying ad valorem tax anymore. And those vehicles still in the ad valorem system are going to be depreciating, so their value will be dropping. So the only reason that would stop that would be a fairly large increase in millage rate, in which case probably be more unhappy people, right? Because that doesn't just affect motor vehicles, that affects everything. So this is the way the splits are projected in the bill. However, they are subject to change, but this is the initial projection, and you'll see they gradually begin to move more and more over to the local side. But let's see what would cause us to change a couple of things. What would cause us to change here and maybe give more to the locals? Or, what I don't think is extremely likely to happen, that we would change it and give more to the state because the locals were bringing in so much money. But we'll talk about that. And then what might change this rate here? So, every year, beginning in 2016, the rates are set for 13, 14, and 15, and the splits are set for 13, 14, and 15. But for 16, the commissioner is going to have to look and say, okay, local governments have met their target. So we're looking at $1 billion plus $60 million by 2015, right? Is that right? And then we're going to project, do we think locals are going to be there in 2016? If they're within 1% of that, nothing changes, and we continue to use that split we just looked at on the chart. If, however, in January of 2016, we look and say, locals aren't making their target, we need then, and if it's by more than 1% less than their target amount, we are going to then adjust that split and give the locals more money. If the reverse were true and everybody was the money was rolling in, we could, if the locals are promised that amount, if they're getting that amount, getting 1% more than that amount, any amount, we would adjust the split so that the additional money would go to the state, and the locals would be kept at whatever their target amount is. Now, fortunately, you don't have to do that. This is something that a determination that will be made out in the department. The authority's been given to the commissioner to make this determination, and if the rates change, we will handle that maintenance and gratis so that I'm not counting on 159 counties to do that for me. I love you guys, but I don't think I want to count on 159 of you to get that number in there the right way. Okay? So we'll make that determination. We'll also tell you by the 31st of the month what that split's going to be. Okay? Everybody with me so far? Now, until January the 31st comes and we tell you what that split's going to be, you can't make a distribution out of TAVT money because you don't know how to distribute it, right? Because we haven't told you what the split is, how much of it comes to the state, how much of it is local. So the first distribution can't be made until we give you that information, but we will do that, and it probably won't be right at the end of the month. So that's the first thing that's going to happen beginning in 2015. Also in 2015, in July, the commissioner is going to look and make some determinations whether or not the state is getting their amount and what's kind of going on with the locals, or are we looking at an adjustment for the locals? And if it looks like we're going to need to give the locals more money or change that percentage, then the state would be short, right? They're not going to make their target amount. So the only way to make that adjustment then would be, that's when the rate would increase. So it could go, for example, from 7% to 7.5%. Now, if that's going to happen and that's the determination of the commissioner, we then have to make that announcement publicly no later than, I believe it's August 31st. And that new rate, overall rate, would be effective that upcoming January. So if that were to happen, if the rate were going to go from 7 to 7.5, chances are good that car selling business is going to get pretty active in November and December, right? Folks are going to be trying to buy while that rate's lower. But that announcement would be made. It would be made to the tax commissioners, but we would also make that as an information bulletin that would go out statewide so that car dealers and everybody would know that that rate was going to change. That rate can be adjusted in those years. The 15, 18, and 22 are the years we'll look at that rate. So if we make that change in 2000, look at it for 15, it would be effective January 1 of 16. That's the rate that would stay in effect for the next 3 years. Now, we could adjust the split if we needed to, but the rate wouldn't change because we don't review that overall rate again for 3 years. That's why I say what goes up normally doesn't come down, right? Now we've got money. We got to figure out what we're going to do with it. How are we going to spend it? All these buckets of money that are piled up in the tax commissioner's office, right? All right, you've got money coming in from the title ad valorem tax. There will be some money still coming straight into the Department of Revenue, and that's for salvage vehicles. Salvage vehicle process will still be handled at Department of Revenue Motor Vehicle Headquarters. There will be some penalties. You will collect penalties for people who pay late. And we'll get into the penalties on a little bit later. Yes, ma'am?
Sorry, I have another question.
That's okay.
Now, are all counties going to be able to do salvage titles?
Her question is, are all counties going to be able to do salvage titles? No. You won't do salvage titles. Yes. There's even a process, and we can talk about that later this afternoon, about how we'll handle rebuilds so that they actually pay the money to you, but we've done all the upfront work. And we can talk about that this afternoon. But there are penalties if people pay late, and there is interest if folks pay late. So all that money has to go into the big pot, and we're going to distribute that. You cannot distribute out of the title, you have to distribute by 30 days at the end of the month. So March ends on the 31st, right? March has 31 days? Okay. So you have 30 days from the end of March to distribute the title tax money. The other thing is you cannot distribute title tax money until after the end of the current month. And we're going to talk about why, which is different a little bit from how most of you do ad valorem tax today. First of all, we've got to pay the state. So the first thing we're going to do out of this big bucket of money is we're going to take 57% of that money and we're going to give it to the state. So that's the first thing you're going to do. So you're going to take and you're going to give the state our share of those fees. When it comes to motor vehicle, and this money will be sent in through motor vehicle because it's all being tracked through gratis. So even though it's called an alternative ad valorem tax, for those of you in the tax commissioner's office that typically submit state ad valorem tax to me on a PL 65 every month, you will continue to do that for the old ad valorem tax, but this new title tax money will actually come in to motor vehicle headquarters with gratis reports. So it's a little bit different in reporting of the two taxes. So you're going to send that to the department, and we're going to take that check or right out of our account if you send that to us electronically, and it goes straight into the general treasury. It doesn't stay with motor vehicle division. Now, before you send us that money, you're allowed to deduct a 1% admin fee for handling and collecting our money. That was kind of the, we keep 1% admin fee of sales tax when we collect local sales tax for you. And so it's like, okay, fair's fair. Y'all get 1% on the sales tax, local government and the county will keep 1%. There are some expenses involved in this, and we're going to talk about those later in the day. So in order to offset some of those expenses, the 1% admin fee will be collected and goes to the county general fund if the tax commissioner pays timely. The tax commissioner doesn't pay out within 30 days, doesn't pay the state within 30 days, you forfeit that admin fee. And you owe me 1% interest. Now, I expect that's only going to happen one time, if ever, because typically you've got 30 days. That should be sufficient unless there's some extenuating circumstance in the county. But typically 30 days would give you sufficient time to pay out. So I don't really expect that to happen, but they put the leverage in there to make sure, I guess, it didn't happen. It's a little bit of a hammer. So the money flow, the money comes in through the tax commissioner's office. Now, currently today, tax commissioner gets title money, registration fees, collecting that ad valorem tax on motor vehicles for all jurisdictions in the county. They're collecting those insurance lap fees, which I know you guys love dealing with that. But now on top of that, you're going to collect title ad valorem tax. You're going to deposit that money into your account, and from that account, you're going to make the distribution. So it's just the way the money's going to flow. Now, the reason that we talked about, I said you couldn't distribute title ad valorem tax for 30 days until after the end of the month, right? I said you couldn't start that distribution until the end of the month. The reason is we have to look at the amount of ad valorem tax collected and make a determination. In March of 2013, did I collect the same amount I collected in March of 2012? And the only way I can do that is wait till the end of the month till those collections are in, right? So that's why you have to wait. So you're going to look at those ad valorem tax collected for all the jurisdictions that are in your county. special districts, fire districts, school systems, everybody. You're going to look at each one of those levies individually and determine, are they equal to or greater than the amount of money they collected in old ad valorem tax for the same month in the prior year? So that's why you've got to hold on to that bucket of money until the end of the month, so we can do this, what we call true up, in this amount of money. So we've already paid the state, so this is the money that's left there in the county. In this case, that 43%, I think it was. So in the current process, you're paying out ad valorem tax, some of you weekly, some of you every 2 weeks, some of you by agreement with your local folks and your school boards are only paying out once a month. That process can continue. You can continue to pay out the old ad valorem tax, what's calculated based on a millage rate, the same way you're paying today. So that process won't change. However, you still have to keep separate this title ad valorem tax until the end of the month. So we can look and see what we need to do. Now, you're still getting ad valorem tax. We talked about this a little bit earlier. Those titled vehicles with no ownership change. There's a lot of us that drive cars till the wheels fall off. You're looking at one. Of course, the way I'm traveling lately, it won't be long till the wheels start falling off mine. And then you have those non-titled vehicles. You have those older vehicles that don't have a title. You have the anything that's pulled. It's not self-propelled, those will continue to pay the ad valorem tax. So you're still getting ad valorem tax from those things. But let's look at now how we're going to true up, what we're going to do about looking at where we are and what we need to do. In this particular example, and this is a very simple one compared to how complicated some of your millage rates are and how your collection system works in ad valorem tax, in this case, you just have a county rate and you have amount of money collected just for county M&O for March of 2012. Gratis knows what that is, because we'll go back and look at those ad valorem tax collections that came in through your office for motor vehicles for that month in 2012. We're then going to know, because we've waited till the end of the month, exactly what you took in March of 2013. Now, I realize that some of that is prior month, prior year, but we're just looking at it kind of as everything that came in that month, because that's the cleanest way to try to match this up. And there's going to be a difference here. Most likely it's going to be that you didn't collect quite as much money in 2013 as you did in 2012. Now, that may not be the case in March of 2013 because a lot of vehicles haven't yet begun to move over into the new world. But you do have the opt-in folks and some other things that will affect that. So it could be. Don't know till we're not going to know till after March ends exactly what March looks like. So this is the first thing you have to do. Now, here's an example with some numbers plugged in, and the 2012 numbers in this case are real world numbers. We've just made some guesses of what we think 2013 might look like. And in this particular case, this is what came in 2000. This is the amount we need to match up to, which is a total of $338,000. And ad valorem tax in this particular case, as over the whole for the county, is $322 million. So the amount we need to make up is $16,000. So we have to take $16,000 out of our money left in title ad valorem tax. And as you can see, we got to put a little bit into each one of these in order to get these folks back up to where the same amount of money they had in 2012. So that process, again, can't take place until the end of the month. Nobody asked this question. Yes, sir.
How do you take into account tax millage rate changes?
I need you.
You got a different tax millage rate in 2 years, you're comparing oranges and apples. How do you deal with that?
You're simply looking at dollars. Okay, you're simply looking at dollars. So the millage rates may change, but you're still comparing dollar to dollar based on that. Again, getting back to that same dollar amount you received in 2012. So, nobody asked this question in this session. This is the first time nobody's immediately raised their hand and said, what happens if I don't have enough money?
Probably looking too far down the road, which I've been known to do, but this seems to, or at least potentially has significant impact on sales tax credit that's applied to local millage rate.
You're
on
correct.
Down the road.
You're correct.
Maybe in unforeseen circumstances in many counties. So we wouldn't be able to apply that in any shape or form. What was traditionally applied no longer going to be applicable.
The question is, those of you who have local option sales tax, do a millage rate rollback equivalent for the amount of local option sales tax that comes in. And that's a rollback that applies to the entire county. You're correct that there's no provision to include this in any sort of rollback. So, you know, hopefully sales tax revenues will stay. You know, how much sales tax revenue is directly attributable to car sales is a very difficult number to pin down, because even if I look at what dealers send in as sales tax, that also includes other things that aren't the sale of the car, parts, some of the things that go on there. So determining exactly and knowing how volatile sales tax is, you're absolutely right. It could have, as we move forward, you would have less money in that pot that makes your rollback rate. So you are correct.
Vicki, this true-up money comes from the portion we send the state?
No. My money's coming out first, all right? And we're going to take my money first. The true-up money will come from whatever, in our initial example, the state's going to get 57% of that pot of money, and the locals are going to get 43%. So you're going to send me mine first. It's all about me, just so you know that. Then you're going to have that 43%, and out of that 43%, you're going to true this up. True up the ad valorem tax. Then if there's anything left, or what is left, we're going to distribute on a different formula. Okay?
Now, will Gratis do that for us?
Will Gratis do that for you?
Then when I get back to office, that's going to be a question.
Almost always. You have some input as to how title tax is distributed. Gratis will walk you through this true-up process. Okay, Gratis is going to walk you through that so that that's done. But now, let's say in March of 2012, I have that $16,000 shortfall in ad valorem tax. And I don't take in $16,000 in title ad valorem tax in March of 2013. And that is very likely to be the case, because the casual sale person has 30 days to pay the title tax. If I have 30 days to pay something, chances are really good I'm going to pay it on day 28 or 29. Most of us are like that. We're going to put it off. So I don't expect somebody's going to buy a new car and they're going to come flying into your office anxious to hand you a couple of $100. So they're going to wait. So it's very likely you won't have a lot of title ad valorem tax coming in that first month. So you may have a shortfall in the first month. Yes, ma'am.
The new owner has 7 days to register the vehicle.
Yes.
Got to register in 7 days, they should have.
All right. That's come up every session. This is number 6, and that's come up every session. Current statute says the new owner in a casual sale is supposed to go register that vehicle within 7 days. However, this new law doesn't require them to file the title application and pay the money for 30 days. Now, there is no penalty at that 7-day now. We're not imposing a penalty if they don't do it. Law enforcement will get them, but you're not going to impose a penalty. So they still need to come in. The only option you would have would be to do something where you could issue the TOP, give them some time to then come back in. But all right, in this case, we don't have enough money. We don't have enough money to true it up. So what are we going to do about it? Well, Gratis is going to help you with this because we don't want you, the tax commissioner, to be in the position to decide who you like best this week. You know, I've only got a small amount to pay, so I think I like the county better this week, so I'm going to pay the county and I'm not going to pay anybody else. So we don't want to put anybody in that position, so what we're going to do is say, okay, we're going to add up all of those millage rates and we're going to figure out proportionately. Tell y'all a sidebar. Yesterday, we were in a different type facility, and I kept hearing something behind me. And I thought, what is that noise? And I really thought it was the bathroom, because the bathroom was right behind me. Late in the afternoon, we finally realized there's this air freshener thing that's spraying about once every, I don't know, 5 minutes, it seemed like, and just really would drive you nuts because it was right behind my head. So we're going to take those millage rates and we're going to add them up, and then we're going to say the school is 54% of that number, the school millage rate. So we're going to take that bucket of money, we're going to give the school 54%. We'll give the county whatever their percentage is, and down the line. So everybody gets something, but nobody gets fully paid out generally. Now, we're going to track that into the next month. So that the next month, we're going to look at April of 2013. What do we look like then? Do we have enough to true up April of 2013? And if so, can we also finish what we owed for March of 2013? And this is going to continue until you get it all made up.
Basically, we're borrowing from Peter to pay Paul.
Yes, good analogy. Borrowing from Peter to pay Paul. Let's hope not. Let's hope the whole theory underlying this is there's going to be sufficient money to do both. Now I think March 2013 may be a little bit tricky. But we'll see. But I think it will level itself out as you move through the process. People tend to buy vehicles. There's about 1.7 million vehicle transfers a year in the state of Georgia. You hope a lot of those are in your county, so that you're the one who's always has the money to make it up. Can we turn some air on?
That's what the noise you heard.
That was the noise I heard? Okay. And I'm going to give you a break in a few minutes, but not right this minute. You're working on the air? Thank you. I was warm, but I figured it was just because I was up here. Now, we have money left over, because we're going to be positive about this, right? We have money left over, and we need to figure out what we're going to do with it. So we're going to divide our pie. We're going to make a pie out of this additional amount of money, and we're going to split it into thirds. Guys, I like pie, so I want big pieces of pie. Cutting pie into eighths is for the birds. I want a third of the pie. When we distribute this money, always, 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 and you probably won't hear that out of my mouth again today, always, 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 the first third of that money goes to the school or school systems in your county. If you have just one county school system, they receive all of that third. If you're in a county that has multiple school systems, you may have a couple of independent school systems or one independent school system, then you have to divide the money between the two school systems. We'll talk about how you do that. Generally speaking, the second third of the pie, which in this case is our green third, is going to go to local governments. We will talk about exception to that, because I said I'll never say always, always, always again, right? There could be an exception to that, and we'll talk about what those exceptions would be. And then the final third almost always goes to local governments, but there is one exception to that. So that's always how that process works. Now, before you can start distributing this next third, or these thirds, you really need to have some understanding of sales tax and what the sales tax makeup of your local jurisdiction is. So we're going to have a quick sales tax lesson before we go on our break. Most counties have what's called local option sales tax. It's a county tax, but the money is shared between the county and municipalities based on their negotiation, and they are required to file a certificate with the commissioner. We are in the process of, counties were just required to go through, and cities to go through that renegotiation process. They're required to do it 2 years after the census is completed. So December 31st of 2012, everybody was supposed to have been through that process and given the department or the revenue commissioner a certificate for how that money is going to be split. Now, folks can't always get along. So we have a large group of counties that haven't been able to reach an agreement yet, because the city wants more and the county wants more, and so they've gone to what's called the baseball arbitration, and the judge is ultimately going to say who gets what. So if there's no new certificate on file, then you will disperse based on what was in effect on December 31st. Now, your county has a copy of that certificate, and you need to have a conversation with them. If you just can't get it out of the county, you can come to local government services, because we have copies of those certificates. Now, there's another kind of local option sales tax, but in this case, in 8 counties in the state, that local option sales tax is dedicated to the school system. Those are Bullock, Chattooga, Habersham, Colquitt, Mitchell, Rabun, Towns, and Houston. Okay? In those cases, that sales tax goes to the school, and we'll talk about what that does in the distribution formula after break. Then we have special purpose local option sales tax. That's that 1 cent that may belong to the county or it may belong to the school that is used for capital projects only. It's voted on, it's on a referendum, there's a set period of time, there are set projects that are going to be built using that money. Very likely the new courthouse up here that they're building here in Forsyth County is going to be built with SPLOST money. Where I used to work many years ago, we built a courthouse using totally SPLOST money. So that money has to be used for that agreement. When you're looking at distribution of this third, if the school has a SPLOST, they don't play into this formula of distribution. It's only the county SPLOST that plays into that. We will also talk about what that may do to some SPLOST referendums and that kind of thing. Then you have HOST, which homestead option sales tax. We only have 2 counties in the state that have homestead option sales tax. You may know who they are? Rockdale? DeKalb. Rockdale and DeKalb. So I don't know that I have any of those folks in the room, but we'll just generally talk about what that is. And in their case, they take that sales tax money, and instead of rolling back the millage rate on every piece of property in the county, they only roll the millage rate back on those folks who have homestead exemption, or roll the value back on those folks with homestead exemption. And then we have MARTA tax, which is to support the rapid transit system in Atlanta. And that will only apply to 1 county. So before we get into this distribution, because it gets a little, you have to think about what you're doing, why don't we, hopefully it will cool off while we take about a 15-minute break. I'm going to start back at, I don't know what time, and my watch is a little bit slow. Who has a, 10:30. I'll start talking.